feedback effect of the global outbreak of COVID-19 is one of the two major risks that China is facing in the near term. The other one is a second wave of infection that comes out of China as restrictions on movement has been lifted. Now, as far as the damages of exports growth is concerned for China, it's anybody's guess because there's so much uncertainty out there with regard to the slowdown in the global economy. I've seen ranges of estimates in terms of export contraction Q1 for China ranging between 20 to 40%. Now, that's really serious. Now, if we are talking about export contraction in the neighborhood of 10% or less, it won't affect China much because, as I have been arguing, since 15 years ago, the Chinese economy has moved from export-led to domestic-led. But when the contraction is really going to be, high double-digit, for example, between 20 and 40%, as the market is talking about, that would be certainly some material impact on the Chinese economy. Now, if that were true, that could possibly pull down the Chinese growth rate year over year by 2-3 percentage points easily. So we are looking at a very bad first quarter, of course, but now the sort of the V-shaped rebound of the Chinese economy is being challenged because of the second round feedback effect from the global weakening of global demand on Chinese exports and hence the Chinese manufacturing sector.
Chi, good morning. Tanveer also joining into the discussion. Could you break it down and be more specific about how you're mapping the trend as far as the trade relation goes between China and the U.S.? Because till December, the trade surplus, the run rate and the trade surplus between the two countries was between 23 to $25 billion. What can be the contraction there?
Well, as I said, there's so much uncertainty out there that the contraction of the export numbers is anybody's guess. With regard to the U.S., there are conflicting forces. One is that China's promised to buy more U.S. imports under the Phase 1 agreement, if you would, signed last December. But obviously, because of this virus outbreak, that would affect China's ability to buy imports because the whole Chinese economy is contracting as well. But on the other hand, for China, there is an offsetting sector, and that is the sharp reduction in Chinese tourism, outbound tourism, which will help a lot in terms of the overall trade picture, i.e. the current account area. So still, we are looking at significant contraction in Chinese exports, stemming from the key markets, the U.S. and Europe. But then on the other hand, we are also expecting, not so bad picture from the other export markets, especially, those developing economies in the Belt and Road Initiative areas. They are also slowing down, but then the impact of the virus outbreak on these other economies are not as big as in Europe and in America, so that the Chinese export to these other countries will not be as bad as those to the U.S. and Europe.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.